Cool. Okay. Um, so I'm trying to do some speed catching up on the news today. Cause let me just tell you, when I got off work today, I didn't do what I was supposed to. I didn't do my homework, figure out what happened. I had trades. I still haven't looked at my trades that I had from this morning. So anyway, good thing I have stop losses in place. Um, and yeah, so I'm just like scrolling through some of my trusted names really quick to try to catch up on some stuff that has happened in the news. Um, One thing I will say is that these talks of stimulus, the election, and then this airline bailout or not bailout is going to really rule the market. I can't really say how much volatility and how much market movement you can just really expect. One thing I do know for a fact is that Nancy Pelosi and Stephen Mnuchin have said that it's going to be hard to get a stimulus deal before the election. So we have, it doesn't even feel like it, but we don't even have like a whole month anymore until the election. So, um, as things stand now, um, they're having a really hard time just trying to get along and trying to compromise. You would think, since the president has already said that he's okay with them going over um, the budget, and he actually would prefer that they did and give more money for the stimulus, you would think that they would kind of go back to where they started from and kind of look at the things that they had in place then and kind of uh, sort through it, figure out, okay, if this meets our needs, then let's just go ahead and pass this. But that's not working out. And we have like 2 weeks and almost 3 weeks. It's not going to be exactly 3 weeks. It's like 2 weeks and 6 days before the election. So, anyway, we just need to keep that in mind. Um, Today was the last day or the second day of Prime Day. Um, I say that because that's going to come up later when we have those retail numbers. Next month is going to account for Prime Day. So let's take a look at the Forex Factory calendar. I'll kind of throw some stuff in there as we go along. Um, but other than the typical stuff, there's not a whole lot going on in the markets right now. Okay, so in the news today, we have we had the producer price index numbers that came out. Those numbers were above forecast. Those numbers were actually good. What we're looking forward to now is the employment numbers for the Australian dollar. So hopefully, I'm gonna try to not necessarily rush, but kind of get this news to you guys in like the next 7 minutes, so then we can kind of see it on the charts in almost real time. Thursday, tomorrow, something that we're going to be looking out for is the EU summit. We're going to be looking forward to hearing from Christine Lagarde, looking forward to any updates they can give us about their end of Brexit, anything they can give us about debt, anything they can give us about COVID, the recovery, trade, tariffs. Um, Tariffs was never really a word that the EU threw around a lot, and same goes for the UK. But lately, they've been talking about tariffs, they've been talking about sanctions on China. So the same rhetoric, the same language that you've heard from our president is now starting to carry over into other countries and their governments as well. These are terms and these are things that you never would have really heard of coming from any of the European governments. And for them now to kind of step up and kind of use the same language, A, kind of falls in line with being an ally, but two, it also shows that, hey, we're going to stand up against China. We're going to stand up against everything that's been going on. And the more countries that kind of get on board with this, the more China is going to be hesitant or reluctant to either A, trade with us or to do wrong. It can either be a good thing or a bad thing. Keep up with that, see how that goes. Also, tomorrow is Philly Fed and unemployment claims. Remember, we're looking for the unemployment claims numbers to include the airlines, Disney, American Express, some of the other corporations that laid people off either permanently or temporarily or just cut jobs altogether. And it wasn't even a layoff. All those jobs that were axed, so to say, last week. We're looking forward to seeing those claims added to this. They've somewhat taken account for it in the unemployment claims number, but I think some of the adjustment that happened was because they were really hoping for a stimulus package. The stimulus package would have helped to cover the airline jobs. But now that we're still kind of at a standstill with that, I don't know if between now and London session, if they're going to redo the forecast for the unemployment claims. It's a possibility because between Asian session, London session is when any of those forecasts could possibly be changed, like at the last minute. Christine Lagarde speaks tomorrow at noon. It's orange. It's of importance because that's going to be the end of London session. It's also going to be lunchtime here in the US. For typical traders, lunchtime is like 11:30 to like 1:30. So that crossover period is why you get so much volatility because you have the session crossover technically ending, and you have people in the banking sector going to lunch. So trading gets kind of crazy during that time anyway, as it is. Friday, so anyway, let me go back really quick. Just pay attention to Christine Lagarde, pay attention to what she says. She's going to be speaking during IMF meetings. So if you're not really familiar with the IMF, what they do, it's almost like a global wrangler of currencies, interest rates, do's, don'ts, debt controller. They kind of oversee all the world's currencies, and how they're handled, how if things that are going on between certain currencies are fair. And with that being said, I will say this. So Mr. Levels brought up in the last call about correlations and how things aren't correlating the way that they used to correlate. One thing I want to say about correlations to everybody is that when we're talking about a pair's correlations, it's only the relationship of that pair. Like we can correlate certain elements of other pairs because they might have a similar currency pair. So like let's say USD CAD and Euro USD. They both share USD. Those are going to correlate more so than like let's say USD JPY. So USD JPY, and I'll tell you why. So when we're talking about currency pairs, it's a matter of understanding what the relationship is between the two countries, how they function together, and how the value is found and known to be fair between those countries. It's going to be different even if you have a USD pair in there comparing it to the EU. The EU has issues with several of its countries paying back debt. They're talking about tariff issues. They're trying to negotiate Brexit right now with the GBP and with the UK. As far as us and Canada, us between the US and Canada, we have a trade agreement in place. Um, the type of tariffs and the um, aggressiveness of the tariffs isn't going to be as harsh because we're already in a trade agreement with them. Canada is more independent. They don't have countries that they're trying to figure out debt with. They're pretty stable right now because they've had their presidential election already. They're kind of, you know, going through the motions, so to say, at this point. The things that make them correlate more so together, USD CAD and EU compared to USD JPY, is the fact that Canada and the EU um, share the commonality of the GBP for right now. So the Queen is what kind of holds all that together. So NZD, USD, so NU, AU, and UCAD are all going to correlate pretty similarly. They're not going to deviate too much because they all have that Queen backing, the UK backing of currencies, trade, that sort of thing. When Brexit is finally finalized, we'll know if that correlation is going to hold up. But for right now, it still pretty much holds. One is going to be slightly more aggressive than the other, being the Australian dollar versus the New Zealand dollar. The Australian dollar is always going to be a little bit more aggressive, move a little bit faster, a little bit more with more volatility. So these correlating pairs have lost and have gained a lot of their correlation percentage. The exotic pairs have definitely changed a lot. If you don't follow any exotic pairs, it will be worth just taking a look at one. I would recommend USD Mexican peso if you were going to look at one to see how the correlation has changed. All of that stuff matters. All of it matters, especially when we start talking about the IMF, solely because that's something that they're looking at. They're looking at the values of these currencies compared to one another. It's something that they're going to talk about, especially now that countries have been looking into and have started working on digital currencies. It's definitely going to be something that they look at. And if you want to know how long Forex is going to be around, they're going to be the ones you want to look to because um, anytime you start pegging and unpegging currencies and start putting them out on the Forex market or taking them off, the IMF is always going to have its hand in there somewhere. And now to Friday, core retail sales. So these retail sales won't have Prime Day. It won't have Walmart's version of Prime Day, and it also won't carry a lot of this new fall shopping that we're getting. So Prime Day, Walmart's version of Prime Day, all that kind of stuff is going to be in the November number. And then consumer sentiment, it's the preliminary consumer sentiment number. Definitely want to see how people feel about the market, how people feel about the economy, the concerns surrounding the election are definitely going to be in that, as well as people are trying to figure out what their future is going to be like. The markets are kind of bracing themselves right now. I've told you guys that the stock market does not like a Democratic president, especially to start. When you start talking about upping taxes on the rich, start talking about messing with capital gains tax and increasing that. Those are the market people. Those are day traders. Those are banks. Those are workers of banks. Those are hedge funds that you're starting to talk about. They don't like that. typically a Republican president will lower capital gains tax, lower taxes on, you know, the quote unquote what we call the rich. Um, so anyway, the market's starting to kind of brace itself for the fact that we could get a Biden presidency because of how the polls are shifting right now. Trump's losing a lot of traction in a lot of states. Biden's gaining traction. The sticking points in the issues being COVID and healthcare. Those are the two issues right now that people are having some problems with. Racial tensions and socioeconomic things as well. Um, it's just you can really nitpick it down, but those are the issues that people are having problems with when it comes to the um, election. We need to have another um, debate. We need to have something else to kind of get more information out to the people. But a lot of people, believe it or not, have already just went ahead and put in their ballots because they already know who they want to vote for. Ballots haven't been counted, but um, according to the polls, is how the market's moving right now. That and the fact that they don't think we're going to get a stimulus anytime soon, and a lot of the COVID trials have been either halted or put on pause, and so that's just delaying when we're going to get a vaccine for the coronavirus. So the market just doesn't like any of this stuff. I told you guys in January that the market's going to be volatile around this time of the year anyway. So it's to be expected. It's just finding your levels, marking them, look at where price could possibly be targeting, and trade off the targets. The fundamentals get screwed up with the tweet, technicals get screwed up with the tweet, but at the end of the day, it takes sentiment and fundamentals to move the market to get technicals to get to where they have to go. So they all work together. And that's all I have to say. So I'm going to turn it over to Mr. Levels so he can get into the charts. If you guys have questions, you can put them in the chat.
Cool beans. Appreciate that, Corman. Great information as always. Good job. Good job.